Yes, I think everyone happy with the way that we started, and also we will continue in the same manner, right? Then let's start the session today. Today I will use same presentation, and also I will discuss another presentation together with you, and that document will be shared after the discussion, because I thought it is better to go with the discussion level. Some areas to be discussed ourselves. Then you will learn much. If you remember last day, we started with the outline, introduction to taxation, ecosystem in taxation, tax policies and යහපාලන සෞභාග්‍ය දැක්ම ජයගමු ශ්‍රී ලංකා පොහොසත් රටක් ලස්සන ජීවිතයක් policies. But we went up to some extent. We learned about why taxation, what is taxation, types of taxes, direct, indirect taxes, objectives or functions of the taxes, and taxation principles, so canons of taxation, tax authorities, especially Inland Revenue Department, what are the taxes handled by Inland Revenue in other way, and local authority, provincial council and local authority. Then another important agency, government agency, who is collecting taxes for import and export. That means where the country is open to the rest of the world, that is Sri Lanka Customs. And we learned about that Director General of Customs collects some taxes which are relevant to IRD and also Excise Department. We discuss about the excise taxes also, and we discuss about the ecosystem in taxation, and we discuss the role players in the ecosystem and how the roles are distinguished with them, and how on the other hand, what are the responsibilities with them, like that. Okay, basically, legislator design the tax law, administrator implement the tax law, taxpayer in a hot seat, always his pocket subject to tax, his expenditure subject to tax, and his behavior also may be subject to tax. His property also may be subject to tax, likewise. On the other hand, since the tax system is much complicated, taxpayer need the help from the expert for maintaining the tax compliance. Therefore, the cluster who another category in the society is recognized as tax agents. Okay. The role of the tax agent is help to the taxpayer to plan taxes and pay proper tax. Plan taxes and pay proper tax. Okay. They can play in the ground, okay, because since the law does not have 100% strict interpretations, therefore, where the interpretations are not available, where are the loopholes available in the law, then tax agent can instruct taxpayers to plan their taxes using the loopholes of the tax system, right? In that scenario, I don't remember whether we discussed that part. Planning of taxes is acceptable. Planning of taxes is acceptable. However, aggressive tax planning not acceptable. In the technical jargon, we have tax planning, tax avoidance. On the other hand, we have another three scenarios, or another three important words. tax avoidance, tax evasion, and tax frauds. Tax avoidance, tax evasion, and tax frauds. According to your knowledge, whether tax avoidance is acceptable or not. Whether tax avoidance is acceptable or not. Yes.
Not, sir.
One answer, not. Any other answer? Forum is open for you. I told you, this is your program.
Yeah,
who?
Mami Vakarayaka. Thanks.
Yeah, Mr. Sumanta, whether you have any answer? My question is whether tax avoidance is acceptable or not. If we categorize good to worst, tax avoidance, tax evasion, and tax frauds, right? No.
Tax
One side.
avoidance is acceptable, sir.
Yeah, very good. Manjula
Tax
telling that
avoidance is accepted, yes.
accepted.
It is
Okay,
within
then
the law.
within the law.
It is-
Very good.
Yeah.
Yes. Yeah, Chandana also mentioned that acceptable. Ironica, not. Densil, not. I accept both answers. I accept both answers. What is the meaning of that? What is the meaning of that? Yes. I accept both answers means both answers are correct or wrong. Yes. I need your support. Both answers are correct or wrong. Accepted means whether it is a difficult question. I told I accept both answers. Accept means correct. If I told that reject, then both are wrong. Now I told accepted. That means tax avoidance is acceptable if it is within the law. If it is within the law. That means if anyone done tax planning by using the loopholes of the tax law and within the legal framework, not going beyond the expectation of the legislator, then it is acceptable. However, if anyone use the loophole but beyond the legal framework and also not match with the original intention of the tax legislator, then that avoidance scheme can be recognized as aggressive tax planning. That is not acceptable. That is not acceptable. Is it clear? Is it clear?
Yes.
Everyone, okay?
Yes.
Right. Then, if the avoidance also having two components, acceptable and unacceptable, then I told you avoidance in the one side, in the middle we have evasion, we have fraud in the other end. I told you good to worst. Then evasion is totally prohibited. Fraud is leads to criminal offenses, right? The current scenario, tax evasion also subject to criminal proceedings. Criminal proceedings. Shatula will discuss with you some of the case laws. But I myself also try my best to discuss some areas with the support of the case laws. Okay, good. Then we know when we talk about the case laws, we have to consider about the role of the judiciary or tax adjudicator. Judiciary. In Sri Lankan context, we have court system, hierarchy in the court system we discussed that day, and therefore always if the court system is having hierarchy, then court system always depend on the binding rule principle. Binding rule principle. Binding rule principle means when discussing any case, if the similar case has been discussed previously by higher court, for example, current case is discussed in the magistrate court, but similar case has been discussed in the district court or high court or appeal court or Supreme Court. Then definitely magistrate court should consider what is the decision given by the higher courts in that scenario. That is called binding rule principle. But scenario, facts, everything should be similar. Okay. Since Sri Lanka having hierarchy in the court system, binding rule principle also applicable. Is it clear? Is it clear? I want your feedback.
Yes, sir.
Is it clear?
Yeah.
Yes.
Good. Then I told you that hierarchy scenario only, but in the same level court also binding rule principle is available. How it is happening? Assume previous case has been decided by 5 judges bench. 5 judges bench at the appeal court level. Assume. No, take Supreme Court level. This is the top level or highest court in Sri Lanka. No? Then 5 judges bench has discussed one case and already decided case is available. Now similar case went up to Supreme Court and current case is discussing by 3 judges. 3 judges. Then if the facts and case, other reasons, scenario are similar, what was discussed in the previous case and what is the current case available, if those are similar, 3 judges bench should adhere the decision given by 5 judges bench. 5 judges bench. Are you okay with my explanation?
Yes.
Yes. Good. Then binding rule principle is applicable even in the same level of court, but if the similar case has been discussed by the higher bench. previously we discussed about the higher court. Higher court, not the highest court, higher court. That means if it is a case in a MC magistrate court, district court, higher to that. High court, higher to that. Appeal court, higher to that. Supreme Court, higher to that. Likewise. Okay. And also
Sir,
I told, yeah.
so the courts relevant here, appeal court and Supreme Court only, right? For tax adjudication. Am I?
Yes. When it's come to the very good question from the Mr. Sumanta, no?
Yeah.
Yeah. Very good question, because in a court system, we recognize Supreme Court and Appeal Court as superior courts. What are the decisions given by those two courts we consider as the case law? Case law. Regarding case law, we consider only judgment which are given in the two superior courts. But when it's come to the court proceedings, court procedure, okay, always binding rule principle is available. Okay. For example, I told you, if the magistrate court is discussing one case and similar case has been discussed in the district court or high court, then, especially high court, then judges who are discussing the case in the magistrate court should follow the binding rule principle. Are you happy with the answer? Sumanta? Sumanta?
Yeah, okay. Yeah.
Please make questions. Right. Then I told you, still we are not properly used the role of tax informant. Tax informant. But we plan to use the tax informant role. And you know, in any society, when anything happen wrong, then there are some kind of people, we recognize them as whistleblowers. Whistleblowers. In our ecosystem in taxation, there are some or few people who play this role. However, we have to improve this process in order to increase the tax revenue. Because when the taxpayers come to inland revenue, sometime when we talk together, sometimes they may ask that, why inland revenue always follow the taxpayers? Why not follow the non-taxpayers? But when we ask to provide information about the non-taxpayers, sometimes they may maintain silent. But as the responsible citizens of the country, you and me, anyone can play the role of tax informant. Only difference is, if I play the role of tax informant, it is official duty. But if you play, it may be professional duty or professional responsibility or responsibility of a citizen, which entitled to rewards. Entitled to rewards. As I told you, there are some people earning money by providing information. Right? Okay. Then let's move to the component of tax law. I think we discussed this part also that day. Whether we discuss? Friends?
Yes.
Yes, good. And also I try my best to go to the Inland Revenue website that day also. I told you, concrete law consists of the Act and Gazette notices. Case law we recognize as the judge-made law. Then in addition to that, we have two components called tax ruling and notices. But regarding tax ruling, who is issuing tax ruling? Who is issuing tax rulings?
IRD.
Yes, in Inland Revenue scenario, Commissioner General of Inland Revenue. That's a ruling committee, and whatever the rulings issued by CGIR available in the IRD website. I want to show you that. I will go to the Inland Revenue website. You can see home page. Then you can see we have public ruling. Public rulings under publications. If you go to the public ruling, there are how many rulings? Income tax. How many rulings? 1, 2, 3, 4, 5, 6, 7. Right? Right? Then, what is the latest ruling issued from the IRD? If you want to check, you can just click here and you can see what is the ruling. Then objective. The objective of this public ruling is to explain the tax treatment in respect of foreign exchange gains and losses, which arise from domestic transaction and on cross-border transaction denominated in foreign currency. In respect of foreign exchange gains and losses, which arise from domestic transactions and on cross-border transaction denominated in foreign currency. You can see relevant provisions. I have one question. Whether you are familiar to use Inland Revenue website in effective manner? Yes? Frankly tell me, no issue, because this is your program. Ultimate aim of this program also you to help to use the Inland Revenue website well and other resources available which are to use well, like that. Yes?
Not so much. If you can guide us, it will be much helpful.
Very good, very good, very good. That is why I did not share any document also today. Course, when the course is going on, batch to batch, we will do some changes, right? And I thought that it is my duty to talk with you and show some important areas. Then, in this ruling, we can see interpretation given here, section 198(1). For the purpose of this act, the term financial instrument, right? You remember that in our Inland Revenue Act number 24 of 2017, we have interpretation chapter. Interpretation chapter, not the interpretation section, right? Then I will go to the where our Inland Revenue Act is available in the website.
Downloads.
Under download acts. Do you know that consolidated Inland Revenue Act is available in our website?
Yes.
Yes. We have updated SSCL and Inland Revenue Act consolidated versions. Then you can see here section 195 is the general interpretation section, right? 95 interpretation. 96 associated person, that is also interpretation. 97 domestic expenses which are not allowed. Mr. Atula will discuss with you. For example, under domestic expenses we have entertainment, right? Entertainment. Regarding entertainment, there is a definition also. On the other hand, under domestic expenses, we have personal traveling related things also, like that. Right? And section 198 deals with financial instrument, right? In this interpretation, what we are discussing, we have very specific interpretation about section 198. And you can see here, financial instrument explained, right? For the purpose of this act, the term financial instrument means a debt claim or debt obligation a derivative instrument, a foreign currency instrument, and any other instrument prescribed by regulation or, in the absence of regulation, treated as the financial instrument by generally accepted accounting principle. It is so, if there is no regulation is published by the CCIR, then we have to consider the general interpretation available in the accounting principles. But except to the extent as may be prescribed by regulation, exclude a membership interest in any entity. That means shares of any company is excluded. Right. However, section 198 subsection 2, we discuss subsection 1 there. 2, for the purpose of this act, debt claim means a right to receive a payment under debt obligation. Debt obligation means an obligation to make a payment to another person that is denominated in money, including accounts payable and the obligation arising under deposits, debentures, stocks, treasury bills, promissory notes, bills of exchange, and bonds. Everything available. However, section 198(3) says, for the purpose of this act, a person derives a financial gain when the person derives interest or gains which respect to a financial instrument. Right? Then, for the purpose of this act, 198(3), a person derives a financial gain when the person derives interest or gain with respect to a financial instrument, and incurs a financial cost when the person incurs interest or loss with respect to a financial instrument. There can be financial gain and financial cost both. As for the section 198(4), for the purpose of this act, a person derives a relevant financial gain when the person derives a financial gain with respect to the derivative or foreign currency instrument, and incurs the relevant financial cost when the person incurs a financial cost with respect to a derivative or foreign currency instrument. Section 198(5), the minister may by regulation prescribe the derivative instrument and the foreign currency instrument. Then minister is the person should describe or prescribe what are the derivative instrument, what are the foreign currency instrument. Then now we are moving to the application of the statutes as mentioned in the ruling. Section 10(1)(b), the following deduction shall not be made in calculating a person's income. That is, most cases we can discuss about the domestic expenses. Roman number 8, an amount that a person has transferred in his financial accounts to a reserve or provision. We do not allow reserve or provision, whatever done in accounting, for tax purpose, because reserve and provisions are actually not the real expenditure. Right? Then an amount that the person has transferred in his financial accounts to a reserve or provision for expenditure or losses not yet incurred but expected to be incurred in a future year of assessment. That means the provision or impairment, whatever, right? Section 10, subsection 3, no deduction shall be allowed except as expressly permitted by this Act. Regarding allowable amounts, it is expressly permitted. If it is so, anything not expressly permitted, then cannot deduct. Section 17, subsection 1 says, for the purpose of calculating person's income from business for a year of assessment, a loss of the person from the realization during the year of assessment, during the year of assets and liabilities referred to in subsection 2 shall be deducted. The loss shall be calculated under chapter 4. Section 17.2, see the analysis done in the when issuing the ruling. Section 17.2, subsection 2, the asset and liabilities are capital asset of a business to the extent to which the asset were used in the production of income from the business, and liabilities of a business to the extent to which, in the case of a liability that is a debt obligation incurred in borrowing money, the money was used, or an asset purchased with the money was used in the production of income from the business, and in the case of any other liability, the liability was incurred in the production of income from the business. Always it is linked with the production of income. Then section 18.4, section 18 deals with what? Section 18, think capitalization rule, right? Think capitalization rule. Then that rule also taken into account when issuing this ruling, because this ruling request, that means from ruling committee, taxpayer may request, right? Then it is published by the IRT. Then how the link is made to the section 18 is, the Commissioner General may specify the circumstances in which losses on financial instrument may only be set against gain on financial instrument. Accordingly, Commissioner General has specified that loss on a financial instrument set against the gain from same type of financial instrument in Gazette notification number 2064/55 dated 1/4/2018. So you can see regarding bank also, as a result of economic crisis and other scenarios, right here, one thing you can see, accordingly, Commissioner General has specified that loss on a financial instrument set against the gain from the type of financial instrument in Gazette. Now it linked with the Gazette also, notification number 2064/55 dated 1/4/2018. And also section 21, 23 subsection 1, 23 subsection 2, 23 subsection 3, 23 subsection 4, and 23 subsection 5, 6. Likewise, 26, 1, 2, 3, 4, 5, 6, and 129 also discuss, right? And clarification. See, the clarification is given. taxation of particular foreign currency exchange gain or loss basically depends on the underlying transaction, the person who carried out such transaction, and the method of accounting the transaction for income tax purpose. I will discuss how the accounting treatment for taxation purpose. By analyzing the underlying transaction, it should be identified the nature of the exchange gain or loss, capital or revenue amounts, realization of the amount as per provisions of the IR Act, and whether it is related to an exempt amount or not. Identification of person who carries out the underlying transaction will decide the application of generally accepted accounting principles. As per the section 129, it is discussed about that. I will explain you with my presentation on the underlying transaction. The IR Act identifies two methods of accounting for income tax purpose: cash basis and accrual basis. And each method differently effect on derivation of exchange gain or loss. Within this framework, tax implication related with exchange gain or loss could be determined as follows. Financial instrument, conclusion is given. Fair value accounting basis, irrespective of whether or not the amount have been derived, incurred or utilized. We have to consider fair value accounting basis. Then persons other than financial institution, what is the amount to be taken? Sri Lanka rupees on the date the amount is taken into account for the purpose of the Inland Revenue Act, spot rate. You can see spot rate. Right? I can show you what is available here. Okay, and also it is clearly mentioned at the time the payment is received or made to remedy the inaccuracy or at the time of deemed inaccuracy. Right? Then persons other than financial institute, exchange gain or loss related to the realization of capital amounts, capital asset or liability. Then we have to recognize financial assets separately. Regarding financial asset, we have to consider some areas. In addition to that, they have right? Then it has been explained and given in a table. Given in a table, loss on trade payable where such loss incurred to a tax deductible expenditure or purchase of trading stock, realized to unrealized, unrealized not allowable as deduction, realized allowable as deduction. Likewise, it is given. See, now my question is not that. Now, Inland Revenue Ruling Committee has issued this ruling. Who is bound with this ruling? That is the question. We are in the topic where component of tax law, components of tax law. Then I told tax ruling also can be considered as part and parcel of the component of the tax law. My question, who is bound with the tax ruling? Before that, there are two types of rulings as per the current Inland Revenue Act. One is public ruling other one is private ruling. If any private ruling is issued by CGIR, it is not publicly available because the reason for issuing that as I told you, reason or whatever the interpretation given for the private ruling is applicable for the person who requests the private ruling. But public ruling is available as public. Now my question, if the Commissioner General issue a public ruling or private ruling regarding one case, until that ruling is withdrawn, who are bound? Who are bound? If I give it as a multiple choice question, I can say taxpayer, tax agent, Inland Revenue Department, that means Commissioner General and his staff, and general public. And general public. 4 answers.
Commissioner General and the staff.
Pardon? Yes, I got the answer from one side. What is the answer?
Commissioner General and the staff.
Yes, Amali. You are perfectly correct. Only Commissioner General and staff is bound. Amali, can you elaborate your answer with the reason also?
Actually, I cannot like in detail. I don't know, but in the previous session,
Yeah.
you mentioned that yeah, the commissioner and the staff is bound to these rulings. So I want to know more about this one also.
Yes, yes. That is why I reopened this place. Okay, because you know, tax ruling is issued by whom? Whom? Ruling committee. Ruling committee is nominated by Commissioner General. Right? Even though it is public ruling, taxpayer having right. If the taxpayer does not agree with any case or any issue or any assessment, he is having a right to go to the court up to final level. That means Supreme Court. If the taxpayer is bound with the public ruling or private ruling, that means taxpayer's right is challenged. Therefore, by issuing public ruling or private ruling, Inland Revenue cannot challenge the right of taxpayer. Therefore, always, if the ruling is issued and until it is withdrawn, only Commissioner General and his staff bound. However, if the taxpayer and tax agent agree with that, assume one ruling is issued, it is accepted by everyone. No argument. Now, for example, one public ruling issued relevant to the employment income, that is, where the employer contributes for the insurance scheme, medical or insurance scheme, on behalf of the employee, it is exempt. But as per the original act, we had the wording, any contribution or payment made by employer to employee for the insurance or medical fund on equal terms. on equal terms.
මට මේකට ගන්න එපා.
It is
මට
exempt,
එපා.
right?
මට පැහැදිලි.
Mr. Priyanta, on equal terms has not been properly explained because, you know, in the different layers in the same organization having different benefits. For example, my brother, younger brother working in the MS group, as per my knowledge, when he was executive, he had lower level coverage. When he became senior executive, he had more than executive. When he became manager, he got more coverage. But if you consider level wise, it is equal. Therefore, first ruling issued, first or second ruling issued to the Inland Revenue Act before the amendment made to that section covered regarding that medical coverage, put the some wordings, all employees in same grade on equal terms. All employees in same grade on equal terms. See how the ambiguity has been cleared through issuing the public ruling. Since it is benefited for everyone, no one argue on the ruling. Right? Is it clear? Is it clear now? Yes.
Yes, sir.
Good, good. Then, now you know, yes.
Yes, sir. I have doubt.
Okay.
Can you little bit elaborate that is regarding the public ruling? So can you elaborate it with the example regarding the private ruling?
Regarding private ruling, Samali, private ruling is applicable only for the person who made the request for the private ruling. Okay. Therefore, it is not public.
Yeah.
Okay. Therefore, assume XYZ company requests some kind of the private ruling. Then, whatever the ruling given by the ruling committee is applicable for that party. And also, XYZ company can accept the IRD view or not, is with them. Right? If the private ruling issued by the IRD is accepted by the taxpayer, means taxpayer obey with the ruling. But still he is having the right to go to court. Because private ruling is not much powerful like public ruling. Okay?
Yeah. Got it.
Thank you. Yes, good. Any other questions? Right.
May I seek some sort of clarification, please?
Sure, sure.
Yeah, so there are two extents. So we can see the expenditure related to production of income can be deducted around the taxable income. So in this case, loss of inventory or specific write-off of bad debts, if these two events or transactions occurred, how it can be elaborated and how we can seek the tax deductions. That's number one. Number two is you are explaining our thin capitalization. If you can just little bit elaborate on that, that will be much benefited. Thank you.
Okay. Regarding bad debts, as per the previous Inland Revenue Acts, we had two scenarios in bad debts. One is bad debts write-off. Other one is provision for bad debts. Right? Provision for bad debts. In
Okay.
accounting terms also, we had bad debts write-off or provision as per the B2B, business to business. For tax purpose, when we write off any bad debts, to allow it, it should be trade debts. First scenario is trade debts. The meaning of trade debts is it is incurred in the day-to-day business operation. Second scenario considered by the IRD is as second requirement, collection action to be taken. Collection action to be taken. Then what kind of collection action to be taken to satisfy by the Commissioner General of Inland Revenue is depend on. However, we had norm within IRD, at least court case should be initiated. Then only it is having possibility to become bad. Okay. Third scenario, when anything write off as bad debts, there cannot be further transaction with such debtor. These are the three criteria. To write off bad debts, it should be trade debts, collection action to be taken, no any transaction with relevant debtor. Means if you are still dealing with that debtor, it cannot be bad, no? Are you okay with the answer?
Yeah, very much
First part.
explanatory. And like if it is a
Then
foreign
wait,
debtor,
wait. Still I have not complete. As per the current Inland Revenue Act, when consider the business income calculation, we have to follow the accrual basis. For employment, we can follow the cash basis. It is mandatory cash basis. And investment income, we can select either cash or accrual basis, what we wish. Regarding other income also, same scenario as per the taxation. Then, previous act, Inland Revenue Act number 10 of 2006 and previous acts allow the provision for bad debts also. When it's come to the provision, if you remember in the accounting terms, we recognize two components on the provision for bad debts, specific provision and general provision. What are they? Can you explain what is general provision, what is specific provision? We take this as a discussion.
yeah, of course, a general provision generally, if you think that some sort of percentage of debtors would be defaulted and
Yes.
taken the population had the whole debtors and make us, I say, 5% or 10% out of these debtors, there is a general provision. Specific provision goes to if you identify a specific person or specific invoice or whatsoever, you
Yes.
just provide only for that.
Perfect, Mr. Jayakodi. Perfect. Then, what is the accounting treatment in the current scenario with the SLFRS, YFRS? Whether we have specific provision and general provision? No. We have impairment. Am I correct?
Yes, impairments.
Impairment. We have individual impairment and collective impairment. Somewhat similar to specific provision and general provision. Am I correct?
Yeah.
Am I correct? Yes. But B2B, again, individual impairment is depend on their weightage or classification or whatever. For example, if the Sampath Bank treat more than 10 million debtors as individual impairment category, very small bank like Indian Overseas Bank or Indian Bank in Sri Lankan scenario, they consider more than 2 million people as category to go to the individual impairment. That is judgmental basis. Okay. However, we consider the tax law changes. As per the previous scenario, previous Inland Revenue Acts, Inland Revenue allow specific provision, but what are the criterions checked by the IRD? If you have any experience, what are the criterions considered by IRD? Yes? Yes? No any idea? Actually, our people check all three scenarios which I discussed. What are they? It should be trade debts, perfectly should check. Second one, what are the collection action taken and whether transaction happening with that data. There was no very specific categorization for that. Therefore, as a practice also, we allow up to some extent with that categorization. But regarding bank and financial institution, there were some other applications like that. Then, yeah.
When it comes to taken collection actions to recover that,
Yes.
it should be legal action or some other actions also are permitted under that.
Yeah. On that write-off scenario, we strictly check that whether legal action taken. Okay.
Yeah.
When considering for the provision scenario, sometimes decision with the relevant officer. If the officer satisfied, that means Commissioner General satisfied to make the provision. Because you know, in the taxation we have permanent adjustment and timing adjustment. When we calculate our taxable income or assessable income or statutory income as per the previous law from the business, we have two scenarios. One is permanent adjustment and temporary timing. For example, depreciation versus capital allowances or depreciation versus allowance for depreciation. You know, if you purchase an asset, in accounting terms, you can claim depreciation for 5 years, assume. Tax purpose also sometimes you can claim allowance for depreciation or capital allowance for 5 years. That means your expenditure can claim with the time frame. Only timing difference is there. However, if you consider entertainment, law directly tell that disallowed. It is not incurred in the production of income as per the law. That is permanent adjustment. Right? Regarding bad debts also we have same scenario. If you write off anything as bad debts and if it is recovered, it becomes the temporary adjustment. We have to consider it as an income. Okay, but if it is not recovered, that is permanent adjustment. Did you understand what I am telling?
Yes.
Okay, then this provision issue was big challenge for the IRD and taxpayers and consultants also. When designing the Inland Revenue Act number 24 of 2017, we had some argument from IRD side to do some changes in the act itself in some places. As a result of that, provision for bad debts totally disallowed. Our neighboring country, India, do not allow provision, only they allow write-off. Same principle we followed. Actually, I also was in the bank and financial service unit those days when the law discussed, and also we have experience with that. And also, other than financial instrument, financial institution, it was given because as per the central bank guidelines, bank and financial institutions should maintain their provision for impairment at 1% of the loans and outstanding as at the end of the period. Therefore, although it is relevant to some other subject, that means bank and financial sector, whatever the going concern scenario of the bank and financial sector, we consider it for the bank and financial sector for tax purpose, and we allow up to some extent up to 1%, but with the restriction. Because if the bank or financial institution issue, so make provision for leasing, finance leasing, it is not allowed for tax purpose. Because you know, when the finance lease agreement is entered into, there is a financial lease agreement with the asset. Therefore, leasing company or lessor, as a bank also doing leasing, they can collect the asset. Therefore, risk is very low. Therefore, we do not allow provision for leasing bad debts. We do not allow for pawning. We do not allow for related party loans. We do not allow for foreign loans. And also we do not allow for staff loans. Those are the 5. Okay. Current law is considered that scenario. Right? Regarding other manufacturing and other businesses, provision is not allowed. Very easy. Write-off is allowed. Are you okay with the answer?
Yeah, thank you for the elaboration. Now, the write-off for the other industries is allowed, but we have to satisfy with the 2 criteria, as you mentioned, right? 3 criteria.
3 criteria. Yes.
Yes.
First
Yes.
thing, it should be trade. It is basic condition.
Okay.
Right?
In case of if that particular customer is a foreign customer, still the court case is applied?
Which court case?
For example, you said that you effort to
Legal
collect illegal actions. Yes, exactly. If it's a foreign customer?
Yes, but some kind of the legal action can be initiated. No? Then regarding foreign customer, I can tell that it depends. Okay.
Okay, thank you. Excuse me, one more question. Now, if the customer is dead or bankrupt, then in that scenario, anyway, I think we can claim, no, as write-offs.
Yes. Then that is why I told you, in some cases, we can take case by case. Only thing is, Commissioner General should satisfy, right?
Which is very difficult, no?
Not always. Not always. Regarding ThinkCap question, I think too early to discuss today. Why I am telling like that? This business income you have not discussed. I have to tell the section 12 first. As for the section 12, if you want, I can go with that 12. We can deduct expenses. 12 discuss about the interest expenses which are incurred in the production of income. Section 12 is a general section which is applicable for in whole sole proprietor business, partnership business, or company or any other. But section 18 is totally applicable for companies. As per the original law, there was argument on that also. But later 2021 amendment made the clear understanding about the section to clear the ambiguity. Really, it is mentioned about the wording company. But as a person who having experience with this section and who capture the ThinkCap rule at the beginning of the IRD, at the beginning when the law is introduced in 2008 or 9 like that. Actually, this ThinkCap rule is originally initiated only to control the related party transaction. This is anti-avoidant provision. Anti-avoidant provision. Because in the associated company scenario, if you remember in the previous law, section 26(1) X and Y are the relevant sections. 26(1) X, when the loan given by the holding company to subsidiary companies, and Y, subsection Y, subsidiary company given loan to the holding company or other subsidiary companies. Right? Then only application was targeted to control the related party transaction, not the whole. But in the current act, it has covered all the loans and receivables, right? Somehow or other, some kind of argument went on, and now it is finalized with the current scenario. When Mr. Atula discussed the subject, please ask question from him and go. And final day, we can discuss. Sometime this program, as Mr. Atula mentioned, he is not available 2 days in Sri Lanka where his discussion is going on. We will try to manage that part, and if permitted, I will discuss that part. Okay? It's better to go with the Mr. Atula on that subject. Right? Are you happy with the answer?
Yes.
Good, good.
Yeah.
Then let's move to my presentation again. We were here and we discussed about the relevant acts, and we have 3 types of income tax returns: IIT, PIT, CIT, IIT individual, PIT partnership, corporate for other all entities. Regarding IIT, with return, there are 10 schedules for year of assessment 2024-25, and we have return plus schedule plus statement of asset and liability. Partnership, we have partnership income tax return plus schedules. Regarding companies and other entities, we have corporate income tax return, relevant schedules. And regarding some of the companies, we have transfer pricing disclosure form as the mandatory requirement. Okay. Who are entitled to, who are liable to submit transfer pricing disclosure form, they have to submit the relevant form.
Excuse me, are we covering transfer pricing also under this course?
No,
Sorry.
unfortunately, no. Sorry, yesterday we had some chat, Professor Watol and myself, and Mr. Atul also was there. But in that chat, Professor Watol is having some kind of the idea to start a program focusing international tax and transfer pricing. Actually, I am happy to do that two parts because due to two reasons. One is transfer pricing always dealing with the cost accounting, right? Therefore, CMA can take that opportunity. The other one, my personal experience, actually in PIM MBA, in my batch, I got the highest marks for international taxation from my international tax guru. I don't know whether you are aware, Mrs. Dayani De Silva, who was the former Commissioner General. Actually, when I joined to the department, she was the Commissioner General in the interview panel, and she got retired later. And before that, she was the advisor to Secretary to the Ministry of Finance, tax advisor. And also I learned international taxation from her at CTA program also, Chartered Tax Advisor. In that program also I was batch second. And also currently I am lecturing international taxation at one program which we designed with the AAT taxation diploma program. And also I am the person who is preparing paper also, exam paper. In that paper also I am doing, and also in CTA program currently I am lecturing for final level, and there I am doing the paper discussion part, and also some areas advanced and like that together with the that area. Therefore, I like to share my knowledge with the team in the transfer pricing and international taxation, right? We'll see. I think Professor is eager to start that kind of program also. Since these programs are going well, I think CMA can take that opportunity also, right? We'll see. What I want to tell you is, in IIT return, we need statement of asset and liability, but in PIT and CIT, we do not collect, because, you know, in accounting scenario, either balance sheet or statement of financial position is available with the PIT and CIT. Therefore, we need not gather asset and liability. On the other hand, IIT scenario, we have some people who are not doing business, but they have income from employment or investment. Therefore, to capture their relevant income earned from the year can be judged or assessed through the asset and liability. That is why we collect asset and liability statement. For government people, government servant, executive level government people, we have to submit asset and liability statement for another institution. What is that? What is that? CBOC. Currently known as the CBOC, previously known as bribery commission. Bribery commission. For your knowledge purpose, when I ask simple question from you, whether present bribery act is powerful than previous act or not. According to your knowledge. Yes? Current law is much powerful. Actually, when preparing that law, I also participated by representing Inland Revenue. And as per the current law, even PLC, people who are in the PLC sector, working in the PLCs also should submit asset and liability statement to the CBOC. They have expanded the coverage. Okay. Right. Let's move to the taxation again. When it comes to the income tax computation, I have given whole process in a one slide here. Whether IIT, PIT or CIT, income received from the relevant sources categorized under section 5 to 8. I am teaching you act also here, right? In the act section 1, 2, 3, 4, we have one. If I move to the act, I will teach you how to read act also. As I asked you very beginning, I have one question to you. Do you have printed copy of Inland Revenue Act with you? Yes, you can give the answer frankly. Be honest.
No.
How many of you having printed copy of Inland Revenue Act?
I have got.
Manjula having. Then
I don't have.
Sumanta? I will ask that question in a different manner. Who are using the soft copies of Inland Revenue Act?
We use it.
I'm using.
Amali using, okay. Then who are the others?
I also use.
Yes, I cannot say your name. Someone, no?
Yes, someone.
Yes. Oh, my friend, someone is here, no? Because I noticed your voice, right? But you were not in the last day.
Yeah, I registered, but I couldn't go to.
Okay. Good,
Yeah.
good. You are in the second time now, no?
Yes.
Good, good.
Yeah.
See the different here, okay? Other members. There are some people doing second time, third time also joining with this program. How interest?
Yeah,
Right.
a lot more to gain.
Then my friend, someone cannot answer for that my questions, right? For others, Amali and others who are using soft copy, what are the benefits that you have using soft copy than the hard copies?
Straight away we can search by typing.
Definitely. On the other hand, although it is trouble to our eyes, we can increase the size, no? Letter size and everything. See, I am recommending you to use the hard copy, not the hard copies, but the soft copy. I am telling with my experience, personal experience. Currently, I am not using any of the hard copies of the document. I try my best to use the soft copies because if I want to go here and there, it's easy to go, right? For example, I use Control F. If I want to see the arm's length, okay, you can see we have ARMS I put, right? We cannot see that. Then if you put real arm's length, no. If you put here, now you can see where the real arm's length is available. If you know the relevant word that you want to search, you can do that. Therefore, please try to use soft copies. Okay, it is easy for you, easy to handle, right? Good. Then, what I want to tell you, in any act, first section is always deal with the short title and effective date of the act. Not only taxation acts, it is available for any of the act passed at the parliament. You know, before act comes, we have bill level, we discuss bill and argue at the parliament, and finally discuss, and when the speaker signs, it becomes law of the country. That is act. Section 2 of most of the acts in a taxation scenario having charging provision or charging section. In our VAT Act also, charging section is section 2, but we have VAT on FS, charging section 25, capital A, right? Separate section also support to charge VAT on financial service by using section 2 together. When it's come to the NBT having combination of section 2 and 3 as charging sections. SSCL also having same scenario. You have to take section 2 and 3 together. In our income law, we can see section 3 taxable income, section 4 assessable income. In the previous Inland Revenue Act, we had the other way, total statutory income, assessable income, taxable income, likewise, right? But here we don't have total statutory income or statutory income from business or whatever. We have directly assessable income from relevant source. As per the current Inland Revenue Act, we have totally mainly four income sources with dominant principle. With dominant principle. Dominant principle means always what is the first income source discussed is dominant than the second. Second is dominant than the third. Third is dominant than the fourth one. Accordingly, when it's come to the income sources, we have 4 income sources: employment, business, investment, and other. When you categorize any income category which received by any person, first you have to check whether it is covered with the employment income. Whether it is covered with the employment income. If not, you can check whether it is coming under the business income. If not, you can check whether it is going to investment income. If not, only you can go to the other income scenario. Other income scenario. Therefore, you have to keep in your mind these applications are very much important. Right? In my presentation, you can see I have omitted section 1, 2, 3, 4. Why? We will discuss them later. Section 1, 2, 3, 4 not discuss about the calculation mechanism. But our calculation is started with the section 5, which deal with the calculation of the assessable income or calculation of assessable income from employment. Section 6, assessable income from business. Section 7, assessable income from investment. Section 8, assessable income from other sources. Then, from assessable income, you can deduct some of the items. Some of the items I am using the word because in this cluster there are 3 categories of deductions, removals. One is, see, before calculating assessable income from all sources, we remove them. One is exempt amounts. Exempt amounts. As per the Inland Revenue Act, there are some income which are exempt from tax. In the current scenario, we have very few exempt incomes because in the previous law, we have number of exemption and concessions under Inland Revenue Act plus BOI Act. And as per the Inland Revenue Act number 24 of 2017, number of concession has been removed and charge income tax. But during Saubhagya period, again, exemption concession introduced, but after introducing new tax policies as Jayagamu Sri Lanka and economic crisis scenario, exemption again removed. However, there are some exemption like BOI exemption and very industry specific exemption like that, which given by the tax laws. Those can be deducted under section 9. And also, with the Inland Revenue Act, we have final withholding payments. In the current scenario, we have mainly 3 final withholding payments. One is regarding individual. If anyone received lottery winning, if it is more than 500,000, see the very important point. If it is less than 500,000, it is exempt from tax. Less than 500,000, it is exempt from tax. The rationale behind 500,000 is previously you know what is the tax-free allowance as per the original act, 500,000 for anyone. Therefore, up to 500,000, lottery winning made exempt, right? If it is more than 500,000, subject to withholding tax. Subject to withholding tax. It is 14%. And also that 14 is final because winning lottery is always depend on the probability. Probability. Right? Therefore, when the tax is charged at source is final, it is very easy. Same principle applicable for the dividend. When the company declares dividend to its shareholders, withholding tax 15% charge, and it is final. That means shareholder received only 85%. It is not subject to tax again. That is why we use what is the tax charge at the source is final. Same income not subject to tax again. I have discussed two items. One is winning from lottery, which is subject to 14% tax, is final withholding tax. Second one, dividend which subject to 15% withholding tax or dividend tax, also final withholding tax payment. In addition to that, where the gems sold at the gem auction organized by National Gem and Jewelry Authority, subject to 2.5% withholding tax. That transaction also considered as final withholding tax. Therefore, right? In addition to that, under deduction, which can be deducted before assessable income calculation, have another category, tax losses. Which are the losses can be claimed under tax law is available. Those can be deducted. After making those deductions, we have assessable income. From assessable income, we can deduct qualifying payments and relief. Regarding individual, we have 1.2 million or 1.8 million relief now. In addition to that, IIT, PIT, CIT, all three having some of the qualifying payment as relief. Okay. For example, if anyone made donation to the government, either cash or non-cash, can be deducted as deduction. Right? Then, after making those deductions, we will have taxable income. On taxable income, we have different tax rates. If it is individual IIT rates, and the IIT rates, we have two categories, normal rates and concession rates, especially having concession rate for retirement benefits. Then for partnership PIT rate, for company rate, and other one. CGT rate on capital gain. And after calculating that tax liability, we recognize it as a gross tax liability. From gross tax liability, you can deduct whatever the taxes paid earlier. Sometimes there may be a person who is resident in Sri Lanka, having income outside Sri Lanka, and paid taxes to that countries. If the same income tax in Sri Lanka, we have to give some credit for the foreign tax paid. Therefore, if anyone having foreign income, he has to disclose that foreign income in gross manner as per the tax law, and also he can claim the right. And you have some understanding about that. After making that deduction, we have balance tax payable or refund. I have given here some of the responsibilities of taxpayers, that is submission of the statement of APIT or APIT return, statement of withholding tax or AIT return, statement of set for the relevant year, and as per this, this would be the final year for the set, but we don't know properly yet. Law has not yet been passed. Then for year of assessment 2005 to 2025, 26, we gave the set like that. And I have given codes also, quarterly payment and annual return submission date likewise. And as I told you, if I tell something about our country situation, as an economist of the country, I see that non-availability of the stable policy scheme or policies in the consistent manner, always we are in trouble as a country. Not in taxation, but in other scenarios too. Because right. Then,
Sorry for interrupting, sir.
sure.
Statement of set is compulsory now, or it is not
Yes.
compulsory?
Compulsory, still compulsory, because law has not been changed.
Okay.
Because in the budget proposal, there was two proposals which not implemented in the amendment. One is right of interest. Right of interest on what is the procedure, whatever the ruling for writing of interest. Second one, abolishing or cancelling set. Okay.
Okay, sir.
Right.
So I have a question before you move on. Yeah,
Sure,
now we
sure.
for rent as well, we have withholding tax.
Yes.
10% withholding tax. So what's the procedure regarding that? So we have to show it under other income?
Yes. I told you in the current
Yeah.
scenario, only 3 items are available under final withholding tax.
Mm.
But as per the original law, we had some other payments also under final withholding tax, for example, interest income.
Yeah.
Right? Interest income subject to 5% withholding tax those days. When it's come to the interest income, actually these areas will be covered by Mr. Atula, but I will cover now up to some extent. 5% withholding tax on interest income received from deposit, interest income received from treasury bill,
Fixed deposits and all that.
government corporation. Under deposit, all the deposits are covered. Government corporation, government, that means corporate debt security, especially where the government, local authority and government corporation issued, or private sector companies issued, and corporate debt securities, and also debentures also. But treasury bill or treasury bond not subject to withholding tax. As per the original law, if anyone received interest from treasury bill, treasury bond also, they can consider it as final withholding payment, and only tax should be paid on that interest at 5%. But with the K.M.BUDDHIKA scenario, most of the withholding tax has been removed. And also you remember, I will tell you that with the policy, and you will see the scenario, and then you will realize what I am telling, how the behavior, right? Wait, I will go with the scenarios and explain that. Okay. Right. Let's move to the recent policy available. As I told you, IIT new act brought by the Yahapalana team. But see the policy of the Yahapalana team. They plan to change direct tax to indirect tax ratio, or indirect tax to direct tax ratio, from 80 to 20 to 60 to 40. In 2015, indirect tax contribution for the government tax revenue is 80. Direct tax contribution is 20. What is the expectation of the Yahapalana government 10 years plan is to achieve 80% to 60 and 20% to increase to 40. However, what are the decision has been taken? Increase VAT rate from 11% to 15% from the, if you remember, it was proposed from the 1st January 2016 with the different rates like that. However, it was done from the 1st November 2016. Right? It has been increased to 15%. Then, reduce general VAT liable threshold from 3.75 million to 3 million. Reduce wholesale retail VAT liable threshold from 100 million to 12.5. All three action taken here leads to increase VAT revenue, not to reduce VAT revenue. Then 80 going to the direction of 100 side, not to the 60 side. Okay. And also, while increasing the indirect tax revenue by change in those three scenarios, rate increased to 15% from 11, threshold reduced from 3.75 to 3 million in the general scenario, wholesale retail sector 100 to 50, 12.5. And introduce Inland Revenue Act number 24 of 2017 by aiming to collect huge revenue. And also temporary new taxes introduced as super gain tax. There were a number of tax proposals, but super gain tax was charged. What are the changes done under the Inland Revenue Act? Are mainly 4 income sources introduced, already we have discussed. And also it is going parallel with the accounting standards. Going parallel with the accounting standard, I explained previously. And also introduce concept of final withholding tax where necessary. Under that final withholding concept in the original Inland Revenue Act number 24 of 2017, right? Then pay withholding tax on employment income make mandatory. Withholding tax on other services also make mandatory. That means government based on the source-based taxes. On the other hand, if the withholding is properly worked, most of the income sources may identified. Therefore, keep the trust on getting revenue from the source-based taxes. Source-based taxes. And also, what is we discuss, self-estimated tax set has been introduced with this Inland Revenue Act. As a result of set, so many people right? Then comparatively less exemption and concessions, and introduce proper system for IIT and new mechanism for PIT, 8% withholding tax on partnership, and partners should pay tax separately in their personal files like that. Okay. And introduce 3-tier CIT mechanism. Normal rate 28, concession rate 14, and maximum rate 40. You know, when the previous Inland Revenue Act is abolished, those are the rates available for the corporate sector. Regarding other entities, they were able to continue their rates. And also, you can see in your slide, I have given what are the withholding taxes charged during the period from 1st April 2018 to 31st March 2019. That means before Saubhagya. APIT mandatory. You have to apply pay table from 1 to 7. Interest or discount subject to 5%. Final withholding payment. And rent 10%, not for the final. Right? Then, as I told you, all other cases 14, partnership 8%, and gem auction 2.5%. Then what was happened? Political change was happened in the country. Again, policy decision, whatever taken, becomes some kind of the political plus policy. However, right? Then under this policy, we have, during that period, we have COVID-19 also. Saubhagyadakma as the one policy. Other one is Budget 2021. It was introduced as 2 waves. Saubhagyadakma is the first one. Second one, Budget 2021. However, ultimate theme of the government was SME sector should get the benefit to right. Then you can see here what are the long-term development plan of the Saubhagyadakma, and see the tax changes done under emergency relief plan and budget 2021. I have used the green color where are the benefit with the taxpayer. What are the policy decision taken, and if the decision is benefit for taxpayer, I have used that color. If it is badly impact on the taxpayer side, then I use right. You can see here, abolish NBT, abolish ESC, abolish DRL, and reduce VAT rate from 15 to 8. Increase VAT threshold from 3 million to 75 million per quarter, 12.5 million to 75 per quarter for wholesale retail sector. Again, reintroduce exemption and concession for the Inland Revenue Act, and also introduce tax amnesty to disclose the income which right. Then in addition to that, remove mandatory payee and introduce voluntary APIT, remove mandatory withholding tax and introduce advance income tax. Especially concession granted by focusing foreign currency, and right. Then concession tax rate also introduced. Right. And also tax rate, tax slabs, everything change for the betterment of the taxpayers, not to the revenue authority, not to the revenue of the country. Regarding VAT, also changes done. income tax also changes done. Everything leads to reduce right. Then very important point here, additional 18% concession rate introduced for the manufacturers, and also 28 standard rate available in the previous scenario reduced to 24, right? Then before budget 2022, this team noticed that country is in the wrong direction. Right? As a result of that, government proposed two taxes called SGST and SSCL. However, before that, government increased cut on financial service rate from 15 to 18. Right? And also, since the tax cut badly impact on the government revenue, government suddenly increased the VAT on FS rate from 15 to 18, where the sensitive sector of the country, which contribute huge amount to the tax revenue, and then one component collect from that. Then right. Another important point here is government introduced surcharge tax at 25% on around 67 companies and 67 companies and individual who are having over 25 billion, sorry, over 2 billion taxable income in the previous year of assessment, subject to pay 25%. Right? Then you can see how tax to GDP ratio went down. It went up to half during the Yahapalana period. It went up to 14%, 14.1 like that. Then it went down during the Saubhagya Dakma up to 7.3. You know, as a result, what was happened, economic crisis happened like that. Then country has been taken by the Mr. Vikramasinghe. His policy was to support to the public. Then from October 2022, again, tax changes done by focusing huge revenue. Under that, Tax-free allowance reduced to 1.2 million. No additional allowance for employment. Slabs made 500,000 each. Tax rate from 6% to 36% for each slabs. Right? Then withholding also make mandatory again, but more practical manner. As per the original act, there was no threshold for rent income, but for rent income also 100,000 given as the monthly relief, because 100,000 into 12 equal to 1.2 million. Therefore, who are below the threshold not to tax, that rule has been introduced. And also, previously we had dividend tax at 14%. Additional 1% has been increased by highlighting we are going parallel with the international funding agencies and tax officials like that. This analysis show you how the individual income tax rates change during the 5 years period. 4 years, I think, not 5. Right? You can see the comparison. Tax-free allowance, relief for employment income, because employment income subject to tax at cash basis on gross amount. On gross amount. Therefore, tax-free allowance is given as additional 700,000. During Saubhagya Dakma, it is really Saubhagya Dakma. I can say it as a tax haven for the people. Right? Then we have again normal scenario with the 1st January 2023. Right. Then regarding individual capital gain tax rate remain unchanged 10%. And partnership, as I told you at the beginning, 8% withholding tax. Later it was converted into the previous scenario. Partnership is subject to tax. First 1 million at 0%, balance at 6%. If the partnership having capital gain, 10% is the applicable rate for whole periods. Regarding company, at the beginning concession rate was 14. It was continue until 30th 9 2022, and now right. And you can see green color where the concession with the taxpayer with the new amendment or new provision. Other places red where the rate happened. Regarding other entities also I have given here. Trust treated as similar to the company, 24, 18, 30. Unit trust and mutual fund, 30, no issue. right? Then still we have 14% for charitable institution and employee trust fund. Then withholding mandatory requirement. After that, right? Then VAT, you can see number of time it has been changed. Rate can be changed through the Gazette notification, but threshold cannot. Therefore, always threshold change happen with the new amendment. Okay. Currently, we have 15 million per quarter for both VAT and SSCL. You can see VAT rate changes here and component of branches of the VAT. Right? You can see how threshold limit behave. You can see inconsistency in the tax policies within these slides, rate changes, threshold changes, like that. When it's come to the VAT, I have given VAT analysis with the one document. Taxable supply, exempt supply, and excluded supply. Okay. Just you can learn that. And other tax changes, telecommunication levy has increased to 15, betting and gaming also increased. Okay. Right? Then what was unable to do by Saubhagya team has been enacted by Mr. Vikramasinghe. That is SSCL. SSCL also charge similar to VAT. As per my reading, SSCL Act is a reproduction of VAT on the NBT Foundation. Right? As per this analysis, our SSCL scope covers the Sri Lankan territorial boundaries similar to VAT, and SSCL charges are available here. You can go through with them. And during the 2023, what is the main change happen is, if anyone making payment more than 500,000 rupees to be done through a banking system. That was the rule. In addition to that, 18 plus, everyone should have written submission process, and it is also going with that. And Gazette has been issued to collect information. As I told you, the role of whistleblower is not properly happening. Therefore, role of whistleblower you can see here government plan to depend on information. Actually, we have a plan to interface with this organization. Already process has been started, and as for the Auditor General's report, you can see we have link with custom, ROC, and some other like that. That is totally targeting the collecting information. Then another change happened, but it is only applicable for the taxes handled through the IR Act. IIT, PIT, CIT, APIT, and AIT cannot pay using then check deposit has been abolished or prohibited for this scenario. Tax payment should be done by depositing cash, by depositing pay order issued by bank, or using online tax payment platform. This I encourage. As a result of those activities, you can see tax to GDP ratio went up to 12.4% in 2024. And also, it consists the highest revenue from IRD also, 8.76% to the GDP. Right. Then recent or latest policy, whatever available in the policy document as per the original scenario. Right. Actually, in the policy document, we had only tax-free allowance for employment income 200,000 and remove VAT from the essential items and other items and keep some of them in this side. However, as per the amendment, what was happened, tax-free allowance increased to 1.8 million or 150,000 per month, and tax rate for first 1 million right, you can see here, previously we had 100,000 per month as tax-free. Now we have 150, that means annually 600,000 has been removed. And slab also rearrange. First 1 million at 6%. Right. Here you can see what are the changes, and new changes happen are introduced 15% income tax rate for service export and foreign sources, and also increase the highest rate 40% to 45%. Betting and gaming, manufacture and sale of liquor or import and sale of liquor or tobacco product subject to 45%. Regarding individual, maximum 45, but concession rate 15, also maximum 15. See the IIT table. यहाँ सौभाग्य දැක්ම යහපාලන ජයගමු ශ්‍රී ලංකාව economic crisis and පොහොසත් රටක් ලස්සන ජීවිතයක්. You can learn the subject in that manner. Regarding company, also 45% rate introduced. New concession rate introduced for the, not concession actually, it is the standard rate for the liquor export. Right. Then regarding service export and foreign source, gazette has been issued by the Commissioner General. You can go to the website and see how is that gazette. And with that, current rates has been highlighted here. Only one column added to the previous table. And withholding tax on interest, 5% has been increased to 10%. That's only. You can see the table change with the 10%. And refund mechanism has been rearranged and introduce direction mechanism again. Quarterly refund limited to maximum 45,000. Then 45 into 4 means 180,000, like that. Refund mechanism will be discussed later, but just I will touch. And since the time is past, I think it is better to discuss later that refund part. And very important thing here is for refund also 30 months introduced. Regarding VAT, since the egg manufacturers not paid tax, not all, some of the egg manufacturers, since they claim under unprocessed agricultural produce category to claim exemption, new interpretation has been introduced. And also commercial importer and commercial export people subject to get the permanent VAT registration. This is also one place where some of the tax evasion happen. It is also one name. New zero rate introduced for one area to address to the court decision. HSBC data center case decision challenge, and it has been further elaborate. And simplified VAT or SVAT mechanism will be abolished from the 1st October 2025. Process is going on. Okay. These are some of the interpretation changes and other things. Electronic return filing is mandatory from the July 2025 for all VAT registered people. You can go through with those things. Regarding digital taxation, I think it is too early to discuss as a country, whatever the knowledge we have gathered from learning from the other. Right? Those are the things. And risk-based refund mechanism will be available. And refund should be issued within 45 days for the eligible exporter and projects. Okay. Extremely sorry for taking additional time, but since you have asked some questions, I manage time to answer for them also, right? Any question or anything to further discuss quickly within 1 or 2 minutes? Yes, I'm happy everyone on the board online. I think it was interesting discussion.
Yes, sir.
Okay. Then
Mr. Saman, regarding lottery winning,
yes.
regarding a lottery winning, Mr. Saman, if a person wins a lottery, he will be charged 14% at source finally, right?
Yes, very simple. If it is lottery winning is less than 500,000 exempt, more than 500,000 subject to 14% withholding tax, and it is fine.
Yeah. If the balance amount the winner goes to invest in a bank, anyway he will be charged withholding tax because the bank doesn't know what the source is. So in order to prevent from that, can a person get self declaration not to deduct withholding tax?
For what?
Saying that I got this sum of money through winning.
No. Capital amount is not subject to tax from the bank, no. Bank charge only withholding tax on interest. If anyone
that you
got
can't,
no. Take the real picture. If you get assume 10 million lottery winning, you are getting only 8,600,000 as net amount. If you put that 8,600,000 amount in a bank account and bank pay interest income, that interest income is subject to withholding tax again at 10%. Why?
That's a different source.
Different source. Yeah, that is the rule. Therefore, you cannot ask any direction or anything to not to charge in withholding tax on interest. That is different source. Lottery winning is subject to 14% withholding tax as the lottery winning source. It is investment income. If you put them into the bank, again separate investment income. Someone can argue that same income tax twice. No. Second income is interest income. First income is winning from lottery. Is it clear?
Yes, Mr. Thank you.
Okay. Since it is 9:40, let's wind up the session. Next day, please bring if you have any question. Thank you. Good night for everyone.
Thank you, sir.
Thank you.
Good
Thank
night.
you. Thank you.
Good night.
Thank you, sir.
Okay, good night. Welcome.
Thank you, sir. Good night.